All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Friday, everybody. Today is February 14th, 2025. You know, I woke up this morning, and when Mish and I first started talking, we do our daily briefing around 8 o'clock like we do every day. It was looking like a pretty slow news day. It was looking like there wouldn't be a whole lot to talk about today. Earnings season is largely behind us now. We still got Nvidia's out there, but that's a ways off. And then we started looking into gold and silver. And whoa, what was going on with gold and silver? Gold was at a new all-time high. It's pulled back a little bit in the last hour or so. But once again, we're talking about all-time highs in gold. And this time it looks like silver is along for the ride. And not only is silver along for the ride, silver's actually leading the way. Silver was having a really nice run. It was up 4% at one point this morning. So we started digging in a little bit more. And, guys, this phenomenon, I don't know what we call it. Do we call it the anti-squeeze? Is that, I don't know, maybe there's a hashtag in there somewhere. I don't know. But this is not the silver squeeze of 2021. This is the freaking opposite of the silver squeeze of 2021. Whatever it is, it's working. And I suspect what this is leading up to, or at least I'm starting to begin to believe in the back of my mind, it's creeping into my thought process, is we're facing a global gold revaluation. I think that's what's going on here. Now, gold revaluations, don't get your hopes up right away. It's not going to directly cause this big surge of gold. It's not going to cause the price to go to $100,000 an ounce, and we're not all going to be rich because we stack gold. What gold revaluation really means is money printing. And of course, money printing means more inflation, which ultimately indirectly leads to higher gold prices. But it's really beginning to look like that's where we're going. So what's happening this morning? We're seeing spot gold, spot silver was rising, but spot gold and silver are rising less than the front month contracts. And in particular in silver, we're seeing a much bigger move in the silver futures. I don't know what the front month contract is right now. Is it March or April? I don't follow the monthly contracts that close, but a bigger move in the front month future contract than we're seeing in spot. That's something that my friend Bob Coleman has talked about a number of times on the channel. By the way, shout out to Bob Coleman. He freaking nailed this call. The last time I had Bob on the channel, you could to the minute mark the top in gold and silver. And I had a lot of snide comments from people oh, way to jinx it, Jack. And this didn't age well. But if you go back and watch that last video I did with Bob, everything he describes is what is playing out now. It's just the price dipped for the month and a half or 2 months following that video. And so everybody's like, oh, well, it was the most wrong thing ever. No, if you listen to what he said, what we're seeing now is exactly what is playing out. So you've got banks are buying up gold, right? They're repatriating, maybe not repatriating. They're bringing it into the States, all right? They're trying, the cover story is it's because of tariffs. And maybe that's what started this whole thing, but it's no longer just a tariff thing. I think the media's got their Trump goggles on. Every story is about Mr. Orange, naturally, because he's Satan incarnate, literally Hitler, all that stuff. Yeah, whatever, all the reasons they say. I don't think this is just a story about Trump tariffs now. I really don't. I think this is now about currency debasement. So what's happening is you're seeing this exchange for physical premium blow out. The front month contract is rising more than the physical. Why is that? Because the banks want the bars. And so in order for the bullion banks and for the guys in London to hang on to their bars a little bit longer, they're offering a premium. Instead of taking this bar from me, why don't you take a futures contract for next month? Take next month's gold bar, and I'll pay you a little bit of money if you do that. And so that's why we're seeing this premium blowout. It's the people who are trying to throttle the flow of bars out of London, trying to slow things down a little bit. So that physical drain, and again, it's the anti-squeeze. It's not retail draining the COMEX. It's the COMEX draining London. And, this is just very different than what we've seen before. Now, this is a sign of physical bar tightness in the gold market, and we're starting to see it now spread to physical bar tightness in the silver market. A few days ago, we did a story about how the Korean Mint had halted gold bar sales in South Korea. Well, this morning, there's another story that the Korean Mint is now halting silver bar sales in South Korea. Why? Well, when they banned the sale of gold, people just naturally started buying silver. And so now silver's leading the way. We've got the same thing. We got mints in a major, Western, we'll say Western democracy, and it's kind of Eastern, but what is South Korea? The 8th largest economy in the world, and they're restricting physical gold and silver bar sales because of supply constraints. I mean, that looks a little bit like 2021 for sure. And then we had this interesting interview from an analyst at TD Securities, and the article was in Kitco this morning covering this interview. I hadn't seen it until I started looking this morning. They're saying heads I win, tails you lose when it comes to the strength of the U.S. dollar. And something I've noticed on this channel a couple times, if you watch the stream every morning, you've probably heard me kind of comment on this, saying, hey, this is weird. Gold has done very well on days of dollar strength. And typically a surging Dixie is very bad for gold because, well, the dollar is the denominator of the price equation. The denominator goes up, the relative value of the fraction goes down, right? But gold has held up very well during periods of dollar strength. And of course, gold has also done very well during periods of dollar weakness. So he's describing this heads I win, tails you lose phenomenon where gold is doing well regardless of what the dollar is. And what he's basically chalking this up to is this demand for gold is being driven by anticipated currency depreciation. Or in my opinion, when I read that, what I think is anticipated currency debasement. And when I think currency debasement anticipated, I can't help but think of Scott Bessent, the new Treasury Secretary, talking about how he wants to monetize the asset side of the U.S. government's balance sheet. In other words, he wants to revalue gold. And again, we talked about this a few days ago, and I think Joe Brown may be doing a video about this because Joe Brown kind of hints at where his videos are going with what he says on Twitter. Gold revaluation is just money printing. That's all it is. They're going to change the value of the gold that's being held at Fort Knox, and then the central bank is just going to make a cash deposit in the Treasury General account. Where's the central bank going to get that money? They're going to create it digitally. It's how they always do it. And so really, currency debasement, gold revaluation just means more money printing. And maybe it's not just the U.S. doing it. Maybe the reason the Chinese central banks and the Korean mint is refusing to sell the bars, maybe the reason all these central banks around the world are buying it is because they're all about to revalue gold at the same time. Now, again, that's not a recipe for direct price appreciation for gold. The central bank's buying drives the price higher, but the revaluation won't be an instantly higher gold price. It will, however, be an instantly higher money supply, and that will lead to asset price appreciation, which will lead to inflation and higher gold prices. So it really looks like, while everybody's like, oh my God, my tariffs and orange man bad, it really looks like this is central banks setting up to revalue gold and print a whole bunch of money. And again, guys, if that is what they're going to do, you better have some of this. I like the shiny. We also got a lot of Bitcoin news going on this morning. 18 states currently have bills in their state legislature to establish Bitcoin reserves at the state level. Now, that's down from 20-something a few months ago, and I think a lot of this is probably bills that have no chance of ever passing because it's just some Republican wants to make a name for himself by proposing at the state level a thing Donald Trump had proposed at the national level. I'm sure there's a lot of that going on. But let's say a small number of these actually happen. We could be looking at a lot of Bitcoin buying, a lot of sources of new demand if several of these states start these strategic Bitcoin reserves. So that's potentially a source of buying there. We've got GameStop stock is surging this morning. Who had that one? GameStop stock is surging because the rumor is the company is going to pull a micro strategy, and instead of being a used video game retailer, they're going to be a Bitcoin holding company, or at least that's the theory here. Whatever it is, it's enough to trigger buying in GameStop, which, I guess a guy posts a thing on Twitter is typically enough to trigger buying in GameStop, but that's worth paying attention to. That could also potentially turn into a source of Bitcoin demand, and maybe another company engaged in the infinite money glitch that works until it doesn't. You got Coinbase reporting earnings this morning of predictably a surge in volume of cryptocurrency trading. So that resulted in pretty good numbers for Coinbase. Guys, with all these stories about, the state crypto reserves and GameStop and Coinbase, I gotta do my best Ned Stark here, and I gotta warn you, winter is coming. All right. The Starks are always right eventually. Crypto winter is coming. We are probably at most 8 months away from the next crypto winter, which is usually the catalyst is some kind of big collapse of an exchange or a fund or somebody, right? My leading candidate is MicroStrategy or Strategy, the artist formerly known as Micro, whatever we're calling them today. That's right now my leading candidate for the trigger for the next crypto winter, but it's going to happen sooner or later. It's happened 3 times already. Just prepare for it. Be careful going out on leverage. I own a lot of Bitcoin. It's one of my biggest holdings now. It wasn't on purpose. I just nibble a little bit on the regular, and then the price ran so much. But you have to understand that crash is coming. It's going to happen. It's going to happen. Prepare for it. Be careful on leverage. We got Japan. Hey, Japan, you wanted inflation. Well, you got it. Congratulations. Now you got to live with it. Wholesale prices in Japan rose 4.2% versus 4.0% expected. Is this the virtuous cycle of inflation I've heard so much about from Japanese central bankers? I don't know, but all of a sudden there's a story about how the Japanese government is dumping their emergency rice reserves to contain runaway food inflation. Isn't it funny how that works? The inflation gets here first, and then the wages go up, but only a little bit, and the average people suffer from it. Gee, who could have seen this coming besides anybody? And pay attention, guys, because that means rate hikes from the Bank of Japan could be on the horizon. And the last time we were talking about a lot of rate hikes from the Bank of Japan, August of last summer, you may recall, that was a rough time to be in stocks. The unwind of the yen carry trade is still a risk out there to the market. And wrapping it up, we got retail sales in the United States this morning, and they were a big miss. So much for the American consumer stretching his budget. Negative 0.9% month over month for January. That is versus negative 0.1 expected. Now, you might be saying, okay, a little bit of seasonality, December to January, people spend less money. That's not really what we're seeing here. This is way, way below expectations. There was a little bit of a decline expected, but the decline was 9 times what they were actually expecting. And it looks like at least half of the decline is due to autos. More problems in the auto space. Guys, remember, rising delinquencies in auto. Beware anybody in auto finance. The car industry has a reckoning coming. Is it 2008 again already for autos? I don't know. But the data this morning is certainly suggesting it. Also, I probably want to check out, I had a few people drop comments asking about why I hadn't weighed in on the super micro business update on any of my live streams. It's because I just had too much to say about the subject and I didn't have time in the live streams to cover it. So I put a video out yesterday about the super micro business update. I think you guys will probably enjoy that one. Go check that one out. It's in the feed there. Why don't we shrink my big million of a head and let's see what's going on in the markets this morning. And don't forget, guys, hit that like button and that subscribe button so you can come on back tomorrow morning and have your coffee with the Melonheads, because we do this every day. Right now, the S&P 500 is pretty much flat. We were a whole lot more negative a few minutes ago, but right now, negative 0.7 points or 0.01% lower, essentially unchanged. The Dow is down 55 points. Again, it was down a lot more a few minutes ago. It's slowly clawing those back, but currently 0.13% lower. And the NASDAQ is also relatively unchanged, but just barely in the red, minus 3 points. There's minus 4 points or 0.02% to the downside. So stocks are down across the board, albeit very little. We've got a slightly weaker dollar, actually considerably weaker dollar again this morning here, 106.74. Below that 107 handle now. We're down 32 basis points or 0.3%. It's possible this weakness in the dollar is being driven by Mr. Orange somewhat easing off on the tariff talk yesterday. There was, I don't know if we want to say a breakthrough, but it seemed like at least resembling progress with the talks with India yesterday. He did sign an executive order on reciprocal tariffs, but they're not going into effect right away. I believe April now. So he is kind of like kicking that can. It really appears to be a negotiating tactic once again. And so I think that's contributing to some dollar weakness this morning. Looking over on the yield curve this morning, we've got the 30-year Treasury 4.690. That's down almost 4 points. The 10-year 4.463, down almost 6 points. And the 2-year is down 5.5 points at 4.257. A little bit of a flight to safety going on the long end of the yield curve this morning. It's a little bit. It's only a small move here, 5 or 6 points. But some people are running out on the yield curve here. And the 1 month is down about 1 basis point or 4.326. Now, let's talk about the flight to safety, if you will. Let's talk about what's going on in gold and silver. Now, it looks like gold has given back most of its gains from this morning. We had hit a new all-time high at one point. We're down from that. The high this morning for spot gold was 2,940. We're currently at 2,924. That's actually down about $4. All that happened in the last few minutes here. Now, let's look at silver, though, because the big surprising move this morning is in silver. Now we've got spot silver shown here at $33.10. That's up by 75 cents or 2.3%. But look at that front month. It is the March contract, $33.73. That's up by $1, by 3%. So we've got a considerably bigger move in that front month contract versus what we're seeing in spot. That's that exchange for physical premium blowing out. That is the big dealers in London saying, instead of draining my bar out of my vault, why don't you take this front month contract? And, well, it's worth a little bit more. It's a little something for the effort there. And so we'll pay a little bit more for that front month contract. We're seeing that here. You've got almost, 62-cent premium for the March future versus what spot is right now. Now, you're always going to have a little bit of a premium built in there, but we're seeing that grow here by about 23, 24 cents just this morning. So that blowout in the EFP, that's suggesting tightness in the physical market. We've also got copper is down by 1.5%. Platinum is lower by about 0.9%. Palladium is unchanged. And oil is modestly higher here at 71.57 for March WTI futures. That's up by about 28 cents or 0.39%. All right, let's talk a little bit about some of these stories here that's going on in the gold market this morning and the silver market. This one in the Korea Times. We talked about it earlier this week, how the Korean Mint had stopped gold sales. Now it is silver. Banks halt sales of silver bars amid soaring demand. Banks are halting the sale of silver bars amid surging demand driven by increasing global uncertainties brought by U.S. President Donald Trump's tariff threats, industry officials said Friday. Again, that tariff threat is looking less and less like what's really going on here to me. Lenders also earlier suspended the sales of gold bars, which have emerged as the most popular safe haven asset in recent months. Due to the surge in gold and silver prices and the resulting spike in demand, which has outpaced supply, the Korean Minting and Security Printing Corp halted its supply of gold bars to banks on Wednesday. The Korean Exchange, for its part, had already suspended bank sales of 10-gram and 100-gram gold bars since October, while continuing to sell kilo bars. However, with silver bar prices also soaring, the exchange notified banks of the suspension of silver bar supply on Thursday. It also noted that the remaining stock of kilogram gold bars would no longer be available. So, tightness of supply in Korea. WTF, what's going on here? And then I saw this one in Kitco, and there were some interesting tidbits in this article in Kitco. Now, Kitco is one of these like perma-bull gold websites. So you always got to be a little bit skeptical of what you read in Kitco. I like Kitco personally. Just to understand they're very biased towards bullish metals, as am I, just acknowledging that bias here. Gold and silver bullion won't be heading back to the UK. Silver is now the best play in commodities, and that's according to this analyst named Gali at TD Securities. The massive outflows of gold and silver bullion from the UK into the US will not likely return even after the tariff and trade situation is resolved. And while gold prices are poised to continue setting fresh all-time highs, the setup for silver is even stronger, according to TD Securities senior commodity strategist Danielle Gali. Or is it Daniel Gali? Sorry, D. Person Gali. In a February 12th interview, Gali said that a stronger dollar has historically been bad for commodities, including precious metals, but that is no longer the case. Gold has an exceptionally strong setup at the moment. The best way that gold bugs can call this setup is heads I win, tails you lose. It's a setup in which a stronger dollar is actually acute enough to catalyze what we call mystery buyer activity, buying predominantly out of Asia from central banks, from retail participants and institutional investors. That is ultimately all tied to currency depreciation hedges. And that's what had me thinking this gold revaluation thing. When we're talking about a strong dollar and all of a sudden central banks start piling in the gold bars, the only thing that's making sense here is it's a strong dollar, but that strong dollar is relative to other currencies. And right now we've got a currency manipulator as the Secretary of the Treasury, Scott Bessent. We've got this fight going on. Even yesterday in the talk of tariffs, there was a lot of talk about currency manipulation, which is Scott Bessent saying, hey, you guys are keeping your currency low in order to gain a favorable trade advantage. That makes you a currency manipulator. But really, Scott Bessent wants to do exactly the same thing. So everybody is trying to debase their currencies like a race to zero here. And so, yes, central banks are buying gold when that happens. Gully said that has been the case for more than 2 years now. When the US dollar is strong enough, it actually has a counterintuitive impact, he said. Now, conversely, if the US dollar weakens and US rates decline, macro funds now have some bullets to deploy, and they're adding to gold in that situation. So in this context, where it's heads I win, tails you lose. In other words, dollar go up, buy gold. Dollar go down, buy gold. And we've seen that. And I've scratched my head at that several times. You know, we see days where the dollar is surging and yet gold is up on that news. And I've said, this doesn't really make sense. Gold is showing a lot of resilience here. But the demand situation in Asia is actually quite different than it was in 2022 and 2023 because China's gold ETFs are no longer supporting the price increases. Now, this is important. It's no longer retail buyers in China, which means it's probably the central bank instead. What we're seeing in this last week is a significant increase in trading volumes on the Shanghai Gold Exchange. Last year, that was ultimately associated with very strong retail buying activity of Chinese-based gold ETFs. This year, that doesn't seem to be the case. It's not exactly clear what is driving it, but we think that the ultimate driver is depreciation pressure, currency depreciation pressure. And guys, that has me thinking the central banks, they're all going to revalue gold, which means they're all going to print a whole bunch of money and cause a whole bunch more inflation. Now, gold had hit another all-time high this morning. Look at this chart here. These are daily candles. You can see we're off the highs from this morning, but 2,927 for spot gold. It seems like we are in a hurry to hit 3,000 here. Now, look, guys, we're due for a pause here. Like this run, this has been pretty substantial. We've been running pretty much nonstop since, we'll say, the beginning of December or mid-December. Gold doesn't move up in a straight line forever. You know, like Bitcoin, eventually it has its little winter. We had this move back in the fall, and then, of course, we paused for a little while. We had a similar move back in May over the summer, and, you know, we are kind of accelerating here. But I guess what I'm saying is let's not be too surprised if we stall out around this 3,000 level. I wouldn't be too surprised to see that. So, as always, be careful going out on leverage. That being said, the macro setup here is really strong. Now, let's look at silver. Much bigger move on the daily candle for silver, $33.25, up by 92 cents, 2.89% higher. Now, the thing with silver, guys, if we zoom way out here, silver has so much catching up to do. While gold is making a new all-time high day in and day out, silver still hasn't even taken out the high from October. So, you know, if now you've got people are banning the sales of gold bars and people are naturally moving to silver because of the shortage of gold, then you can expect silver to start outperforming gold, but it hasn't done that for years. Maybe that big correction in the gold to silver ratio, that's a lot of people, including myself, have pointed out for several years, is about to start happening, which would mean a big run in silver prices. But again, guys, if we zoom out, I mean, you know, let's set this to like, I don't know, weekly candles, and we zoom way, way out. I mean, you can see, guys, we're nowhere near an all-time high. The all-time high in 2011 was closer to $50. So silver's got a long way to go. I know this is a messy chart. I got too many things on here, but point being, silver setup looking really good here. Silver threatening that $35 high from back in October. Now, Bitcoin, on the other hand, is kind of the opposite. Bitcoin is stuck in a rut here in the mid-90s. And when I say stuck in a rut, let's keep that in perspective, right? We're still within 10% of all-time highs. So stuck in a pretty shallow rut, we'll say, here at $96,659, up about $31, basically unchanged as shown on Coinbase. But there's a lot of stories about Bitcoin going on today. Bitcoin could see $23 billion of inflows if these 18 states pass bills to establish crypto reserves. This is pretty interesting. A lot of this, I'm sure, is political theater, but it's a good bet some of these are going to get through. If all 20 bills introduced in 18 states to establish state-level Bitcoin reserves are enacted, it could potentially lead to the buying of more than $23 billion worth of Bitcoin, or some 247,000 Bitcoins in total, and drive up the crypto's price, according to investment manager Van Eck. Now, let me just say, guys, that is not going to happen. All 18 states are not going to establish Bitcoin reserves, and $23 billion will not flow into the market. All right, that's like pie in the sky scenario, but probably some fraction of that is going to happen. Bitcoin traded slightly above $96,000 on Thursday. Legislators in states including Massachusetts, Ohio, Texas, Illinois, North Carolina, and Florida have introduced bills in the last few months proposing the establishment of government reserves to invest in Bitcoin and potentially other digital assets. And in this Market Watch article, they're listing all the states: Arizona, Florida, Pennsylvania, Oklahoma, Massachusetts, Wyoming, Ohio, New Hampshire, Utah, Texas, North Dakota. Need I go on, guys? A lot of states. Pretty much what almost half the country has proposed establishing a Bitcoin reserve, and the federal government has proposed establishing a Bitcoin reserve. And you've got other countries proposing the establishment of Bitcoin reserves. All of these things are not going to happen. Some of these things are going to happen, and that means more adoption of Bitcoin. That means more dollar and more fiat liquidity flowing into an ever-shrinking environment of Bitcoin liquidity. So this could propel Bitcoin higher. We've still got a few months left in this FOMO cycle, in my opinion. I think, around August, September, October is when you start getting really nervous about Bitcoin winter. But it could be governments buying Bitcoin is the next catalyst for higher prices. Meanwhile, GameStop is considering investing in Bitcoin and other cryptocurrencies, sources say. I got to point out, guys, this is anonymously sourced, but this is sourced by multiple anonymous sources. Video game retailer turned meme stock GameStop is considering investing in Bitcoin and other cryptocurrencies, according to sources familiar with the matter. There's those guys again. GameStop is exploring investment in alternative asset classes, including crypto and Bitcoin in particular. Three sources said shares of GameStop soared as much as 20% in extended trading following the news. It's well off those highs now. The retailer could decide not to follow through with the investments. The company is still in the process of figuring out if this makes sense for GameStop's business, according to the source. Look, guys, used video games is a novelty now. You're not going to be able to sustain this company just doing brick and mortar stores selling retail games. The NFT marketplace is not going to do it. GameStop needs to find a new business beyond just selling stock. All right, they need to figure something out here. Maybe they're pulling a macro strategy or a strategy or whatever they're going to call themselves next week. Maybe that's the new face of this company. Again, you got to be prepared to survive crypto winter if you're going to go through that, although volatility is pretty much nothing new to GameStop. But look at this stock here. It's up 8.2% this morning. It was as much higher as 20%, $28.50 here, up $2. Just be careful on this one, guys. Rumors, especially around GameStop, and let's just say a lot of money goes here to die. Just pointing that one out. And full disclosure, I still own a little bit of GameStop, so I'd love to see it. I'm just skeptical. Call me skeptical. That's all. Meanwhile, Coinbase revenue surges more than 130%, driven by post-election crypto rally. Coinbase reported a pretty good quarter here. That's all it comes down to. Coinbase on Thursday reported better than expected fourth quarter results and its biggest quarterly revenue in 3 years, strengthened by a raging post-election rally that pushed crypto prices to a new high after new high at the end of last year. Let's talk a little bit about some of the numbers. I had them highlighted, son of a gun here. Let's see, revenue of $2.3 billion compared with $953 million in the same period a year ago. That's more than a double. Transaction revenue more than doubled to $1.56 billion. Trading volume was up $439 billion. That's up 185% year over year, almost tripling. Consumer trading volume rose 224%. Institutional trading volume rose 176%. You kind of see where we're going here. We got no surprises. Coinbase, we're in a FOMO rally. This is nothing new to Bitcoin. This is a predictable cycle. And it looks like the market was kind of predicting this too, because despite those incredibly impressive numbers, Coinbase is actually down by about 2% here. It seems a lot of this was already priced in. Actually, let's refresh this here. Yep, down about 2.6% on this earnings now that the market is open. Let's talk about what's going on in Japan here. All right, Japan wanted inflation, and boy, howdy, did they get it. Japan's wholesale inflation jumps, reinforcing BOJ rate hike bets. Pay attention, guys. That yen carry trade, it's still out there. Japan's annual wholesale inflation jumped to a 7-month high of 4.2% in January and accelerated for the 5th straight month, highlighting persistent price pressures and reinforcing market bets of another interest rate hike this year. Guys, even though Japan has hiked a few times over the last year, they still have the easiest monetary policy in the world by far. They are madmen in Japan with the money printing and the QE, and it's got to stop. Inflation is now 4.2%. What are they waiting for? While wages are rising solidly, elevated food and energy costs are weighing on consumer sentiment and delaying a pickup in household spending, said Takeshi Minami, sorry guys, chief economist at Norinchukin Research Institute. There's little reason for the BOJ to accelerate the price of rate hikes. Horrible takes for 1,000, please, Alex. The reason why food and energy prices are rising faster than wages is because of your currency debasement. You need to stop that because the consumer prices rise first, then the wages rise. So you're sitting around here waiting for the basic laws of economics to change to suit your narrative. Well, it's been like 15 years. It ain't happening. The inflation rises first, guys. We've seen this literally everywhere always. And meanwhile, you got this one, Japan to release emergency rice reserves to fight runaway inflation. Well, there's your virtuous cycle of inflation that you've been trying to create, BOJ. Congratulations, and may God have mercy on your soul. The Japanese government said Friday it will release a fifth of its emergency rice stockpile after hot weather, poor harvest, and panic buying over a mega quake, warning nearly doubled prices over a year. And money printing, you forgot to mention money printing is also driving your prices higher. Japan has previously tapped into its reserves to cope with disasters, but this marked the first time since the stockpile was built in 1995 that it was doing so because of supply chain problems. Some supermarket shelves were emptied in August following a week-long holiday, a series of typhoons, and warnings of a looming major earthquake that has so far failed to materialize. Well, there you go, guys. You wanted inflation. You tried really hard to print money and create inflation, and now you got to release emergency reserves from your rice stockpile. Pay attention to USD JPY, guys. We've seen a little bit of strengthening of the yen in the last day or two. Remember this chart moving down. That is the yen strengthening. We've got 2 days in a row here of strengthening yen. The yen has actually strengthened quite a bit since the beginning of January. And I just want to zoom out on the chart. And remember, guys, that August 5th panic, right? Remember that morning when they all of a sudden nobody was able to sell their stocks because, well, they took away the sell button because markets are always rigged now and forever. Well, we could be heading back to a situation like that if Japan is finally seeing that rise of inflation that for whatever reason they were trying on purpose to create. Well, that means it's probably going to get away from them, which means they're probably going to have to hike interest rates a lot more aggressively, which could precipitate another, or maybe the word facilitate, I don't know, it could create another surge in the strength of the yen, which could result in the unwind of the yen carry trade. Keep an eye on Japan. All right, retail sales. Let's get through this one quick. Retail sales in the U.S. decreased 0.9% in January over the previous month. That is way more than the 0.1% decrease the market was expecting. Big drop in retail sales here, 0.9% month over month. And no, guys, that's not just seasonality. Again, much bigger than what the market was expecting. Now, 0.9% to the downside for retail sales. Let's see what happens when you strip out autos from that equation. Retail sales ex autos in the United States decreased just 0.4% for the same month. So you can see here a much smaller decline when you don't count autos. That means autos was a significant contributor. A big negative to that retail sales last month was being driven by trouble in the car market. We've seen a lot of automakers, GM being the sole exception, but pretty much all of the automakers have been posting pretty lousy numbers. Auto finance, banks that deal in car loans. We've seen some credit unions fail because of delinquencies in auto loans that are continuing to rise. They're actually the highest they've been since, I think, 2010 right now. So there's trouble brewing in the auto space. You can see it in these retail numbers. Pretty bad data here this morning dealing with that. And I just want to say thank you very much to my buddy Travis. What's going on, brother? He says, love you, Jack. Thank you for all you do. Your morning lives are appreciated. Well, thank you, Travis. I appreciate the good vibes, sir, very much. Thank you for everything you do as well. And I love you too, man. Sorry. Did I make it awkward? Did I make it awkward? Do we need to get a room? I don't know. Sorry. Thanks, Travis. Love you, brother. Gordon Guanu, what's going on? Dragons hoard gold. The collective noun for Mongols is a horde. Interesting. Maybe a little inner Mongolian gold buying going on there. And central banks hoard out the wealth of the nations they supposedly serve. Oh, look at that. We've got a poet on our hands, guys. I just love what you did with that there. Mr. Gordon Guano. Dragons hoard gold. So we're saying the Chinese, the dragons there, is that the thing? Okay, the Mongols are the horde. Okay, Inner Mongolia, part of China, Mongolia, Chinese neighbor. And of course, yes, central banks are a bunch of whores. I agree with the sentiment. Thank you very much, Gordon Guano, for supporting the channel with such wonderful poetry early in the morning. My man, Mish the Mod, is saying, oh, thank you, Mish, for that. I would have forgot. Monday is a holiday, President's Day, and so markets are closed, and so there will be no live stream on Monday morning. Thank you very much, Mish, for the reminder. And ADB Spartan, thank you very much, sir, for supporting the channel. He says, Treasury yields will crash faster than gold increases since Treasuries are base money and global debt is denominated in dollars. Treasuries is base money. Okay, global debt denominated in dollars. I think we're talking really about the flight to safety. And, well, yeah, I think we would see Treasuries rise first in a flight to safety, right? I'm going to use 2020 as my my analogy in this situation. When we saw everything go to hell in a handbasket in 2020, remember Bill Ackman and hell is coming, everything, all that. We saw U.S. Treasuries, the yields absolutely crash. Like you could watch it by the second we were watching yields fall, right? Now, gold and silver did well also, but we actually saw a little bit of a sell-off in the early days of that market panic. And then once the central bank started their ridiculous bond buying and, they created all the special purpose vehicles and all the silly stimulus acts, then we saw gold just entered a rip your face off rally through the whole middle of 2020. So I agree, at least initially, we'll see treasuries well outperform gold. That being said, I think in the long run, gold is your safer bet. Although you get a little bit of yield with the treasuries. Just be careful, guys. Remember, if you go chasing bonds, you could end up a Silicon Valley Bank, right? They believed what the Fed said, and they said, "Oh, we're not gonna hike rates anytime soon." And so banks like Silicon Valley piled into U.S. Treasuries for the perception of safety. Then inflation came roaring back, and they're like, "Oh, changed our mind. Just kidding, raising rates." And all of a sudden, Silicon Valley Bank starts losing billions of dollars, ultimately resulting in failing the bank. When you're playing in U.S. Treasuries, you are 100% at the whim of unelected bureaucrats of the Federal Reserve and what they feel like doing. Just keep that one in mind. I mean, I own T-bills, so I'm in there. Just word of caution, especially if you're going out on the long end of the curve. Thank you, Mr. Spartan, sir. Eben J, thank you for supporting the channel. Says lots of love to the Melon Patch today on Valentine's Day, and thank you for being awesome. Thank you, Eben J, for everything you do for the channel. Shout out to all my melon heads. You guys rock. Thank you so much, Eben J. Sassafras says, little donation while I can before the U.S. annexes my home. All right, we're up there and from the 51st state. Is that what we're saying this morning? So sad to see us go from closest allies to severe enemies. Good luck to all. Look, I don't think we're necessarily going into the whole the end of South Park, the movie here. I don't think we're going to be trading shots with Terrence and Phillip across the border anytime soon. The whole 51st state thing, it's entertaining. I wouldn't lose any sleep over that one. Let's just put it that way. Thank you very much, Sassafras, for the good vibes this morning from my sworn enemy to the north. And Charles G says, Doge is in the IRS now. Good riddance. Don't forget your sink, Elon, when you walk into the IRS. Close it down, away with income taxes. Hey, how about a constitutional amendment getting rid of them? Let's just throw that out. Throw it out there. We didn't have an income tax for 125, 135 years in this country. Was it 1913, 1911? We created the income tax. I don't remember when that amendment was. But the world still spun back then. We still had a country. Everything still worked. Hey, stranger things have happened. By the way, speaking of getting rid of the income tax, and everybody's like, oh my God, it would be so catastrophic. Did you hear Mr. Orange yesterday just floated the idea arbitrarily of cutting defense spending in half? He threw the idea out there, and he's talking. I mean, when we're talking about getting rid of the IRS, it's just radical ideas. Might as well throw them out there. I mean, look, the world is a freaking mess, and everything is on fire. So, let's get radical. Let's talk about opening up a fire hose in our own living room because it's on fire. Talking about how about a deal between the U.S., Russia, and China where we all agree to cut defense spending in half? Whoa, peace could break out at any moment. And of course, everybody's like, "Oh my God, he's a madman. How could he possibly even think about not spending hundreds of billions and trillions of dollars more than we have on instruments of pointless destruction?" Well, maybe if we all decide to do it, maybe we realize, wow, it's actually a lot more productive to build things and do productive things than to just create bombs that are useless unless we shoot them at each other and kill 20-year-olds because 80-year-olds can't get along. Hey, I just throw it out there. What a freaking concept. I don't know. Yeah, he's shooting from the hip and he's just firing off randomly. But what if everybody said yes? Would it be so bad if they said yes? Just throw it out there. Thank you very much again, Chuck G. And KDM says, up next, pension funds buy Bitcoin reserves. You know, that's the first thing Mish said this morning when we were talking about that article about the Bitcoin strategic reserves was pension funds buying Bitcoin. I think that's already happening, to be honest with you, KDM. I think a lot of the pension funds probably have rules that say they can't own Bitcoin directly, but I think those pensions have rules that say they're allowed to buy ETFs. And I think a lot of the reason we've seen so much money flowing into Bitcoin ETFs since last year is because pensions, among other institutions, are buying it. So I wouldn't be surprised to learn that that's already happening. Again, guys, winter is coming. Not to Ned Stark the hell out of this thing, but plan for the downtimes because they are coming. Thank you very much, KDM. Nashville Pasta Man says, happy VD. Excellent SMCI vid, strong work. Thank you so much, Nashville Pasta Man. Same to you as well, sir. And yeah, guys, check out that SMCI video because, you know, at the end of the day, the SMCI business update, and I kind of said this like over and over again in the video to the point where like I started making jokes about saying the same thing over and over again. All that business update was Charles Lang, a known liar, a known fraudster, saying a bunch of things. And everybody's like, oh, they say they're going to file on time. They say they won't have to restate. Well, they are liars. So if a liar tells you a thing, why would you believe the liar? That's kind of how reputation works. I don't know if you guys knew this. And it's amazing. So many of these SMCI bros are on Twitter like, the company said they're not going to have to restate, so take that. And I'm like, oh, yeah, you can totally believe him because it's only the second time the guy's been accused of fraud in the last 5 years, right? Why would you believe anything Charles Lang says at this point, right? Like, oh, Mr. Sam Bankman-Fried, you're accused of a $60 billion fraud. How do you plead? Not guilty, Your Honor. And they're like, all right, well, I guess we're done here, everybody. Pack things up. The guy says he didn't do it. So, I mean, it's not like a fraudster would lie, right? Nah. Anyways, people believe him. I don't know why. But people believe him. Thank you very much, Pasta Man, for the good vibes, sir. Appreciate the support of the channel. Macro Battle Axe. Wow, I like that name. Macro Battle Axe. Man, we got some awesome names in this group. Gold rally outpacing SPX for 12 months now. Classic currency debasement. I agree. Hey, and you know what else has been happening for those last 12 months? The supply of money has been growing. I flashed that M2 chart yesterday on the live stream. Same thing. And I agree wholeheartedly. I think this asset bubble, yeah, you got the AI narrative that's propping things up. But at the end of the day, you have a growing money supply. And I can't remember the name of the law. Son of a gun. What's the Cantillon effect? Those closest to the money creation see the gains first. Those furthest from the money creation see them last. And well, first, the money flows into assets, then consumer prices, and last but not least, wages, and the poors get a break. And the money supply is growing and asset prices are going up. It's very simple what we're seeing happen. I agree wholeheartedly. Macro Battle Axe. I love that name. That is great. Thank you for supporting the channel, sir. Bill Yang, what's going on? He says, did you buy roses for Mrs. Special? You're going to get me in trouble, Bill. Be careful. No, melon flowers. We got a special watermelon, a bouquet of watermelon flowers on the way. Thank you, Bill, for putting me in the doghouse, sir. And Harmonair LLC says, so what are you buying with your extra taxpayer dollars? I wouldn't count those extra taxpayer dollars just yet. I don't work for an NGO, so I'm not getting a raise from the gold bars that were tossed off the Titanic, if you will. I don't know if you guys saw that clip or not, but good God, there was a scramble to waste as much money as possible at the end of last year. You just got to love it. Yeah, so much taxpayer dollars. I don't know where I'm going to put it all. I'm not banking on a tax cut anytime soon. I know they're talking about tax cuts, but at this point, I'd just be happy to watch the government spending go down. Call me crazy. I think it's possible. I don't think they're going to do it, but I insist it is still possible. Thank you, Harmonair LLC. ABD Spartan says, Fed saying not cutting rates soon. Safety plan. That's right. The Fed is in no hurry to cut rates after being in a gigantic freaking hurry to cut rates just a few months ago. What has changed? It's a funny question there. By the way, was that the worst Fed pivot in history or wasn't it? I mean, like they're all of a sudden they're in a scramble to cut rates. They cut by 50 basis points. Then inflation comes right back. The stock market goes to new all-time highs. And now it looks like, I mean, honestly, it looks like we're closer to another rate hike than cut at this point. I know we're not. They're still talking about being in no hurry. But if inflation keeps rising, they're going to have to start hiking again. Got to love it. They're just our central bankers. They really got their stuff together over there, don't they? Thank you, ABD Spartan. And thank you to One Wheeler who says, what do you think about Halliburton? It's bottoming down here to me. CL Oil Holding and RB. These are names I don't particularly follow. Gasoline is breaking out. Look, when it comes to the oil space right now, we've got a Treasury Secretary who is insisting on more domestic production, more oil production, and we've got OPEC that is poised to increase production. So the thing about Halliburton, correct me if I'm wrong, Halliburton is mostly involved in exploration and production. I believe they're more an oil infrastructure play versus a what is the price of oil doing today kind of play or, wholesale. And if that is the case, then yes, I think that's probably at least sector-wise where you want to be, because I think we're going to see more pipelines built. I think we're going to see more holes poked in the ground. So the people who are selling the pipe and poking the holes will do well. But I also think that's going to ultimately translate into a lot more oil flowing right as OPEC turns on the valves. And again, peace could break out at any moment, and that would result in more Russian supply hitting the market. So just be careful not being too directly exposed to that price per barrel. And so names like, a Chevron or an Exxon, probably not as safe as the exploration and production names. But while all that is going on, you have to watch out because those E&P names are also highly exposed to higher interest rates. And if inflation expectations are rising, I'm making the bear case now. If inflation expectations are rising, you're going to see long-term interest rates rise, and that would be bad for those names that are usually very heavily indebted. So that's my take on those as a whole. Thank you very much, One Wheeler, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Shout out to all you guys. Thank you for the generosity in the super chats and support of the channel. Also, thank you to my magnanimous Melonheads on YouTube and Patreon. Looking forward to talking to you guys at 2 p.m. this afternoon. Oh, my God, I haven't posted the link yet. I will do that right away. Thank you for reminding me. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.